Good afternoon, everybody. This is Mark, and it's Monday, and we're going to be doing the recap. So we walked in this morning. We knew from the weekend events with Cyprus what was going to happen. We were down a chunk. It was mitigated, shockingly. I got to tell you, I did not expect the events of today really to play out the way they necessarily did. Understandably, it was a little bit of a round trip, but I thought we could have been down, as much as 1-2% possibly across the board, understanding what some of the European banks, some of Australia I think was down a chunk, some of the foreign, countries were down a chunk after Cyprus and the bankruptcy and the interest rates are charging. So we'll have to see how this plays out. But I think it more, as I said it this morning in my morning meeting, I think it was more of an excuse to say, you know what, take some risk off the table. No need to necessarily, there's no harm in locking in some gains, and I think that's really what people did. Again, a little bit surprised that some of these stocks actually rallied midday from the early morning, lows. They did most of them. They did really sell off, so there was damage done across the board. But overall, that's part of the the way the market. That's part of the way the market trades. We're up 11% for the year. You cannot go to that pace. The reality is it's going to be some digestion. There's going to be some back and fill. This is healthy. And the only thing that really could derail us was this headline news. We got it. Excuse to take some stuff off the table. Just because we did a little bit of rally, almost a green, doesn't mean, buyers are coming back in full droves. I think it's just still staying on the sideline, being a little bit more flexible is really the way to trade. So today, from a trading perspective, we're talking about one stock only. And I wasn't here on Friday, but that gave us the basically buy on pullback. I was shocked, with the fact that we were down. It gave us a very good opportunity, and that's Apple. It's a stock that everybody has loved to hate for so long, but technically it has done its work and done its job correctly in the sense it's built a long enough base, broke a downtrend, went over the 21-day moving average as of Friday, and it actually gapped down a little bit today, $2-3, so it was still contained, and went green first, and obviously went green and never looked back. And here's, just so we could see the 13-minute chart. You could just see how it traded. I'm right off the bat, went green in the first half an hour, 40 minutes a day, and then never looked back, and it really just, grinded up against its 8-day moving average. And at this point, you're looking at the 50-day next line of defense, which is around 464, 465, which is probably in the cards this week. And then you have 485. Understand, this is a momentum stock. It had such momentum on the downside. Obviously, at 700, there was upgrades across the board, 1,000, 1,200, 1,100, 800. And the stock came from 700 all the way down to 420-ish. And then you're getting downgrades across the board from analysts also. Downgrade to 320, downgrade to 350. It's a momentum stock, and obviously these analysts always jump on the bandwagon, usually to the wrong way, even though I got to give props to BTIG. They did upgrade it the other day, timely at that. And the fact is, it was ready. It's a momentum stock. You could say it's 50 days going to be how it stops, but it's, again, the fact that it has such momentum, when it triggers, it might go a lot further than this, and it might, at some point, touch the 500 in the near term. You got to wait and see. Obviously, I will take a chunk of risk off at the 50-day, and I did take some, stuff off, certainly from the day trade point of view, to, lock in some profits. And ideally, let's see it be in play again, because I think that's good. Other stocks, high beta. I'll go down the list. Amazon, nothing great. Actually looks pretty, bearish to me, but this is the low end of the range. Am I taking a stab here at the low end of the range? Maybe in a smaller time frame. Nothing to write home about. Google, 800 seems to be where it's holding, but it did break some key moving averages, the 21-day moving average. First time it broke it since mid-January. So it's a little bit of warning signs, and we're sort of getting it. Is money going to Apple and coming out of Google? That seems to be the MO that's on the street right now. So we'll have to wait and see. Some other high beta. Netflix actually recovered pretty nicely, bounced off its 21-day moving average, fine. Still in there, but we'll have to wait and see. It's a day-to-day trade. here and there. LinkedIn, same type of idea. Didn't quite get to its 21-day moving average. Is it still in play? It's still in play. It's still a best in breed. But these things, these stocks need more time. If they go up 30, 40, 50% and they're, tremendous moves, they need months of digestion a lot of times. And that's where I think we're at. Other sectors, the banks, we'll go to the banks for a second. BAC seems like best in breed, held in there very nicely. JP Morgan held in there okay. Wells Fargo held in there. Goldman Sachs is still lagging, but it's fine. I think the banks are still fine. Doesn't necessarily mean you have to be in there every second, but they still look good. Look for, if they come back down, look for, I would say, I think this is the 50-day moving average. Look for the 50-day on Goldman and the rest of the stocks as they come back down, and that might be little chances for us to get back involved if they get down to that level. If not, they might just base here for a period of time. Same with the home builders. I think there's still leadership. That they've been a little bit lackluster, but you still got to keep them on the radar. Some of the semis I am still watching. I said it this morning, some of these biotech stocks seem like they need a little break, and a little break doesn't mean necessarily it's a great short, but it means it needs a break. Celgene had a good run from 100. Let it digest here for a few days. See what happens. PCYC, same type of trade. Let it digest. It's going to do, bounce around. No definitive pattern to say I want to get involved on the long side or I want to get involved on the short side. That's where we're at. I don't know. I'm not even. It's funny when we get like this. I don't really search out in different sectors. The oil sector, you could say arguably that it was a little weak. OIH, the ETF, was not very strong today at all. Same with Schlumberger. You can go down the list. Chevron, not really anything to write home about. I think Apache probably. We're in that range where it's going to be stock specific for a period of time. I'd love to see the VIX, which was up roughly around 20% today. I'd love to see it continue. It's good from a trading perspective. It gives big travel ranges on the S&Ps on a daily basis. It's what we like to see, versus going back to our, just constantly buying and low VIX. We'll get back there eventually, but I think we're in for a few weeks, possibly a little longer, of this back and forth headline-related new action, and you just got to be prepared for it. It means I take risk off, regardless of what we're doing from an intraday point of view. You can always put the risk back on very quickly. These travel ranges are going to continue to be good, drastic, roller coastery, and that in turn creates a good trading environment. But at the same time, are we going to get that 5% pullback? I don't know. Will they ring the bell when it happens? Probably not, to say it's viable. But I still think I still think there's going to be people that will end up chasing this market at some point in time. I just think we're at that point in the year where, quite frankly, we're due for the little bit of gyrations in the market overall. And I think taking a little bit of risk off right this second is prudent. And understandably, we're gonna have some good trading across the board. So hopefully you were able to take advantage of what I think was the one and only really good trade today. Apple, obviously from the short, if you came in short, you obviously got paid handsomely. And we'll have to see what they give us tomorrow. Charts are definitely going to take some time to correct and digest, but that's part of the game, and you got to be patient. Hopefully you had a good day, and I'll see you back tomorrow.
I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.